Today's going to be a great call. So, to me, this is going to be a life-changing call for somebody. So if you grasp it, there are people out there that will use this product to buy homes. We know inventory is the challenge, but I sat with David Hauser a couple weeks ago. He can tell you who he is. The conversation was supposed to be 30 minutes. It went an hour and a half because I was blown away by what he's doing with renovation loans. And I was like, there is so much opportunity here for real estate agents and especially homeowners to buy houses. Like even when you buy a brand new house, it's not the way they want it. They're trying to customize it, right? There's something they want. So now this gives an opportunity for you to go out. If you have that vision, I don't. So if you send me into a house, I can't see anything. My wife can, right? Matt and I even worked on a project. I have a rental that I wanted to reno. I looked at it. He goes, "What do you want to do?" I'm like, "I have no idea. Like, can you tell me?" And so he did. There are people that have that vision. If you can sell that vision or create that vision for your buyer and use this product, they can move into a customized home potentially is the way they want it with equity, right? Instead of buying a house at full purchase price and having no equity, they could buy something, have equity in it because they did a renovation loan potentially, and then have it the way they want it, and it's their dream home. And you get paid, and you got a happy customer, and you're serving the community out there. So I want to cover that. But two things I want to cover real quick before we get into David. One, who here knows about the trigger leads that your clients are getting after they have a mortgage credit pull? Yeah.
I don't.
Are your clients complaining to you like this is painful? It's picked up the pace. Now there's legislation out there that hasn't passed yet, but they're working on it. It's looking favorable. It looks like it should pass to stop the credit reporting agencies from selling your client's information to lenders for trigger leads. A good friend of mine just got their credit pull with us last week. It was 9 a.m. She goes, "Jeff, it's 9 a.m. I've already received 24 phone calls this morning." And to the point where they didn't want to talk to her. They're like now calling me going, "Okay, when am I going to be able to talk to Frank?" And she's like, "They're actually being disrespectful. Like this is like terrorizing to me. This is terrible." So I want to tell you guys, we have, and we'll throw it in the chat here. Let me give you a screen share real quick. Tell me when you can see this document here.
Yep.
Okay. So what we started doing for clients, whenever you refer them to us, we're like, "Look, we're going to pull your credit." And then you're going to get bombarded with solicitations. They're painful. And so one of our clients got 24 calls before 9 a.m. to stop the mail offers and to stop the phone calls, either call this number or opt out at this website. And then we get them to apply, and then we take it from there. The other thing they can do is they can freeze their credit reports, which I did. I've done all these. Freeze your credit report so that nobody can pull your credit without your authorization. Maybe that's for you as an agent, adding value up front for your clients. They'll love you for it, especially when they're not getting drilled by these calls. I mean, it's beyond obnoxious right now. And I feel bad for people. And they call me like, "Jeff, what is going on? My phone won't stop ringing." Here's the thing. It's not just that week. It's not going to stop for like 18 months. So these people, because here's the thing, they sell it right now for like $300 a lead because it's fresh. 18 months from now, they'll sell it for like $1. And there's still people out there that are like, "Oh, I'll pay $1 for it, and I'll just turn on an automated campaign and just drill these people." So to opt out of it, you can give them these links and make sure that they're protected. The other thing I wanted to talk to you about was I've sat with a number of agents recently, and they're like, "Jeff, I don't know where to get leads. Like, I don't know how to get business. I don't know what to do." And I'm like, well, right now, with the world telling you rates are higher, purchase prices are high, don't buy a house, you have to sell the dream. And you have to do it with numbers. Like theory isn't working anymore. So you got to show people the numbers of what's the benefit of owning real estate. And so I want to show you real quick, and this is a true story. So let me ask you a question. I had a 20-year-old reach out to me 2 years ago and go, "Hey, I'm an entrepreneur." He's 20. He said he's an entrepreneur. I'm like, "Dude, what are you entrepreneur in? Like, how does that happen?" He goes, "Any chance I could sit down and pick your brain?" Should I sit down with that kid? Like with a business intention? I did. I sat with him. Where my heart is, like, I want to see our young people have hope. They are not learning the stuff in school that they need to learn to win in life, whether it's mindset, whether it's real estate, whether it's finances, whatever. So I said, I'm going to sit with this young man. He goes, I want to change my life. He goes, I don't want to live like I grew up. I want to make money. I want to have money. And I think I could do it through real estate, Jeff. And I see your videos online. Hey, can you talk to me about real estate? How can I buy real estate? And I looked at him and he just quit college. And I said, well, first you got to get a job, right? You got to have stable income. Then you got to save money. And then once you get there, we can get you pre-approved. He goes and gets a job as a receptionist, making like $20 an hour. Calls me a year later. He's got $10,000 saved.
Mm-hmm.
I said, he goes, do I qualify now? I'm like, not yet, but close. Keep going. Calls me a little bit later. Okay, I got a 2-year work history. I got $17,000 saved. Can I buy a house now? I'm like, yes. Like, good job. How did you save 17 grand? He's like, I automated my deposit from my check. So one went to a high yield savings, one went to crypto, one went to a Roth IRA. I was left with like 150, 200 bucks a week. I knew that's all I could spend to take my girlfriend out for gas, everything else. So I just lived on that money I had budgeted. He closed on a 3-plex 3 months ago. He spent less than $10,000 to buy the house because he went FHA. He's going to live in one of the units. He put 3.5% down. He got seller financing. And he came to the table with $6,700 plus his $2,000 hand money, plus the home inspection. He's in under 10 grand. What do you think that 10 grand is going to turn into in 10 years? Anybody want to take a guess?
The 10 grand and
300,000.
Man, who said 300,000?
I did, Karen.
Karen, let me show you. And this is the point I'm talking about when you talk to customers. To show, you got to show the numbers. You can't just say it, right? Can you guys see my screen?
Yeah.
Okay. So here's the thing. The appraiser said he's going to get rent of $805 for each unit. I went and sat with him after he closed. He already had one tenant starting January 1st, paying $1,000. He had another one paying $1,325. His unit's the nicest unit. He's going to move out and probably rent it for the more than $1,325. So I put $1,500 in these numbers. Here's what here's his profit after 10 years.
Mm-hmm.
His property, he bought it for $189,900. I used 3.45 appreciation rate in this area. So it's going to be worth $266,000. So he gained $76,000 from the property going up. Amortization gain from the rent tenants paying down his mortgage. He gained $30,000. And then the rest was in the difference of the rents. And I calculated for taxes going up. I calculated for maintenance fees. I calculated for his rent increasing. I even calculated 6% for him to sell the property at the end. Now, that's one move because this 20-year-old was disciplined enough to make the right move and invest his money. Like, I'm 52 years old. Like, if I knew what he knew at 20, I would be retired. He makes two more moves like this. This kid's a millionaire by the time he's 32.
Mm-hmm.
Now, how does that, anybody on this call, does that make you go, I need to buy investment properties? Like, I have a CPA who's my age in our BNI group who yesterday in our group says, Jeff, you told the story about the kid buying the investment property. We need to sit down. Me and my wife talked. We got to buy investment properties. So I showed the numbers, gave the proof. A CPA who knows numbers is now going to buy an investment property. We created a client, right? And that's what David's doing here today, because he's going to create inventory for you with these renovation loans, and you're going to create clients, and you're going to crush 2025. So, David, with that, take over, brother. And thank you for taking your time to be here. And everybody that's on the call, thank you for spending this time, this 30 minutes, 45 minutes, whatever we spend, to invest in yourselves, because it's going to pay huge dividends this year for you.
Wow. Okay, great. Well, thank you, Jeff. That was by the way, that's an amazing story, and I think it's a great kickoff and a great segue into what we're talking about. You know, creating niche markets for yourself and partnering with folks like Jeff will certainly set yourself apart in 2025. I mean, you know, the last few years have been challenged, to say the least. 2025 is still up in the air what it's going to look like overall. But I think exactly what that scenario Jeff just ran through, and showing somebody, counseling them and giving them solid guidance on what homeownership could look like for them and how it could change their life and create wealth, equity wealth, or, you know, homeownership wealth anyway, is certainly something that needs to be preached. It's not taught in school. You know, it's up to us in the housing industry to make sure people understand the tools that are in front of them when it comes to investing and making life moves. And I think for real estate agents and for us as lenders, you know, we've got a unique opportunity to bring those kind of realities to the people that we serve. So with that said, it's, like I said, it's a great segue into renovation lending. It's another niche. It's going to separate yourselves apart from others that are in your marketplace. And if you're not familiar with renovation lending, hopefully after this brief presentation, you'll have a better understanding of what it can do for you, not only you and your business, but for those that you serve and your clients. And thank you, Jeff, for having us. So I do have somebody that's on the call with me. Her name's Crystal Shahan. She's in here, she's in the mix somewhere. Crystal is my partner and renovation liaison for our team. She helps keep the wheels turning. So from time to time, she may step up, speak up, and correct me. So it's okay. It's okay. She's allowed to do that. So anyway, I'm going to share screen. So you're going to see a full screen here in just a second, hopefully. And we'll dive right into this. Right. Share screen.
As he's pulling that up, has anybody on here already done a renovation loan? Are you familiar with renovation loans? Okay. Smooth experience, good experience, bad experience. How was it?
I've had clients with the 203K rehab loan, but not this.
Okay.
It was miserable.
Well, Paula, that's what my story has been. And, you know, talking to David, it's supposedly not as miserable as that. He's been doing this for 30 years. Every time we go down that path, the customer ends up going, I quit, I submit, like I'm not doing it, I'm not finishing it. But like, that's why David's here.
I've had some that were difficult, and then I've had some that were smooth, and it all comes down to who's actually managing it on the back end and how much they know. And if you've got somebody that doesn't know what they're doing, it's going to be a nightmare. But the smoothest ones, the person on the other end, the loan officer, was really involved and knew what they were doing, and it just made it so smooth.
Lisa, David's loving you.
Yeah, I absolutely. I don't know. Can you see my face, or is it all renovation?
And
Because
I would agree with Lisa, because if you have somebody that focuses on this and knows what they're doing, then it's a smooth transaction. And, you know, but when the people that just try to dabble into it, you have issues.
Right.
Okay, let me do a caveat to that. When we were in Texas, we personally did them, and it was great. I've helped clients here with them on the rehab side, it's been not good. So I experienced it was good. When I was helping clients here in PA, it's not been good.
Well, we're going to try to change that up for you now.
Yeah, no doubt. Wow. So we've got a kind of a mixed bag. Is there any home buyers on the phone today, or all real estate agents? I mean, it's fine either way. I don't care. Just curious. Okay, fair enough. So let me back up and tell you this real quick. So yes, as Jeff mentioned, I've been involved in renovation lending for 30 years. I did my first one 1994. Yes. Time is slipping away from us, isn't it? But over the years, you know, I've worked in different environments. Crystal and I both have, and she's kind of manages the backside of this, and which is a huge benefit to Jeff and his team, as you'll learn as we talk more about this. But somebody mentioned that, you know, the backside, the draw process or whatever was horrible. And that's absolutely correct. You know, most lenders, all lenders actually, anyone who offers government lending can offer an FHA 203K loan, for example, but most choose not to. The smart ones choose not to if they don't understand how to manage it. And one thing that's a little bit different about what we're doing here at Stockton is we have not only enhanced the product offerings, and which is why Jeff is having this call today. We've enhanced the product offerings, but also we're managing the back end of the process ourselves. So we're bringing it in-house, we're taking more control over it, and we're going to be able to deliver a better experience for the home buyer after closing. Most of you don't even realize what happens after closing with these loans, but that's where the stickiness can really get sticky, I guess, so to speak. So anyway, So hopefully this is going to be a great presentation. And as we move forward and you work with Jeff, you have a great experience, and we'll make sure that you do. Okay. So let's jump into this real quick here. I'm going to share again. We'll go back, try this again. And by the way, I love being interrupted. So please bring your questions forward. As we go. Okay. Hang on one second. I had this right a second ago. Share from beginning.
As you said, you like being interrupted. I'm trying to see if there's anybody on here that likes to interrupt, but everybody on here seems to be polite. I don't see any interrupted. Chick's here. Never mind. Scratch that. I saw him.
Jeff, tell me when we got renovation on the screen.
You're good. Renovation lending's up.
All right. Okay. So we're going to talk about renovation financing. Well, what is renovation financing? It's very simple, right? It's one loan. It's one closing. It's a fixed rate loan, typically a 15 or a 30-year term. The appraisal is based upon the after improved value, all right, or the subject to value. So if there's some ugliness, it's okay. But the nice thing about this, it's always based upon the after improved value. And repairs are always completed after closing, right? So what's important about that to you as real estate professionals? What happens at closing? What happens to you at closing? Right?
Paid.
You get paid.
Get paid.
You get paid at closing, and there's nothing worse than waiting for people to do work on a property, and because that just delays the homeowner taking possession, it delays the seller moving on with their lives, and it also delays you getting paid, right? So when a home has properties, when a property has issues, renovation financing is always about getting the loan closed and then completing the work, because the appraisal is done on the subject to or the after improved value. Renovation financing is available for a purchase or refinance transaction. Okay. Now, as a lot of you have spoken and excuse me, and voiced your opinion on your experience with renovation financing, a lot of homeowners really don't have any experience with renovation financing. And this is about as close as it gets for them, right? They've all watched this show. Right? Anyone on this call not know who these two individuals are?
I don't watch those.
I'm sure you have, though. There's a reason, right? So Joe Gaines is what? I mean, she got her start as a real estate agent, and she found a niche for herself in helping people create visions for the properties that were available on the marketplace in her hometown, which is Waco, Texas, right? Well, that spawned I shouldn't say it spawned, but it reignited a whole generation of shows. And your consumers, the people that you're talking to right now, I'm sure that you've had the conversation where they've said, hey, we'd love to buy a fixer-upper. Or they said, yeah, we watched those fixer-upper shows. How do they, those shows are fake. How do they get the money to do that? Well, that's what this presentation is all about. Those shows are somewhat staged, right? But as you just saw Chip and Joe Gaines there, they actually do a really good job of walking through the process. If you watch the show from beginning to end on what the property looks like when it starts, the money that they're putting into it, what the comps look like, and what the after improved value is. He always finishes his little math problem with what the subject property should be valued at after all the repairs are made. And then, of course, at the end of the show, they show that. So people get this idea from watching all these shows that they want to take on some projects, right? Or at least they want to know that it's available to them. So they just keep going on and on. Here's more of them. I mean, look at this: Home Hunters Renovation, Property Brothers, and then my favorite at the bottom, in the bottom right corner, This Old House, which is what I always watched right before cartoons when I was a kid, right? The old Bob Vila. So anyway, the consumer has it baked in their heads that they can take on repairs and improvements and just put them in the financing. But when they go to talk to the bank about it, most banks will turn them away, say, no, we don't offer that. We don't do that. You'll have to make all the repairs first if the property needs repairs. But not all properties need repairs, right? Some properties just need a little bit of sprucing up, a little bit of cleanup, maybe sometimes. Or maybe it's something as simple as appliances. The smallest renovation loan I ever did was for a single individual. She was in her mid-60s and buying her house for the first time. She'd rented her entire life. And when she went to buy the house, during the walkthrough, or like, I don't know, sometime leading up to the walkthrough, they took the range out of the house and she didn't have any money left. She's like, I don't have any money to buy a range. And what am I going to do? I'm supposed to close on this house. I just simply told her, I said, why don't you go to Lowe's, give me an estimate for a range and bring it to me, and we'll include it in the deal. And we did. And the day she closed, Lowe's delivered a range to the house and she lived happily ever after. Now,
Wow.
sounds very simple, right? But I'll explain that in a little bit more detail. So as we go on, with the consumer watching these kind of shows, it puts them in the mindset that this is possible. And it is. And what are the benefits for you when you're dealing with Jeff and his team and providing the opportunity for somebody to do this? Well, you're going to make more properties marketable. So when you're looking at 2025 and your business plan and creating your strategy for this year, creating a niche for yourself, finding a new way to market to people, you want to maybe look at all the properties that are available. So, according to NAR, there's somewhere between 14 and 16 million vacant properties on the marketplace.
Wow.
Right? That's a lot of properties, especially considering new construction's averaging about 1 million new builds a year. And you've got 14 to 16 million vacant properties sitting out there on the marketplace. Now, I think most of you are from around the Pittsburgh market. Obviously, I'm about 2.5 hours away from you. I was just in Pittsburgh a couple weeks ago. Beautiful city, but obviously an older city, right? And where I live is obviously old too. That leaves a lot of housing stock out there, and a lot of it, neighborhoods of properties that could be beautiful. And I know Pittsburgh has done a great job in rehabbing and renovating a lot of the districts there in your community. But this is a way that you can look at the communities around you and create inventory out of properties that are there. Maybe they're distressed, they're beat up. Inventory is limited, obviously, we all know that. And limited inventory usually leads to distressed inventory. It's the scratch and dent, it's what's left. All the premium properties have moved on. So for you to have a tool to make properties more marketable is certainly going to work in your favor. So making properties more marketable, overcoming the challenges of selling a home in need of repair. So being able to present a property that's beat up, kind of like let's go back to Fixer Upper. When Joe Gaines walks into a property, what's the first thing that she says? Anyone?
Nope.
Joe Gaines. She opens the door, she throws the door open, she walks in, and she just looks at the room and she says, now, the first thing she says, imagine this room with new hardwood floors. Let's trade the ceiling. Let's take out this wall. Let's put a fireplace down the end. What is she doing right then?
Setting the scene.
Setting the scene. She's creating a vision. She's not selling the box. She's not selling the Barney purple carpet, the ugly, green walls or whatever. I have green walls, olive green walls in my house when I bought it. She's not selling that. She's immediately jumping in and creating a vision, selling what could be, not what the customer is seeing in front of them, helping them create a vision. I know Jeff's already admitted he's not good at that, but maybe some of you are, right? So overcoming the challenges of selling a home in need of required or desired repairs. Maybe they just need something different, right? Increase the potential buyers. So by offering or knowing, just understanding renovation. I'm not here to make you a mortgage banker specialized in renovation, but I want to give you enough information that to reach out to Jeff and his team and get what you need from them. By increasing the offerings, you're increasing your potential buyers. We do offer all the government programs, FHA, VA, USDA, all full-blown renovation, right? Not too many lenders offer that. I think I can name a couple in the entire country that offer all three of those combined. Most don't. Most offer the FHA 203K, which is the oldest of all of the renovation programs. And it's had a bad name for years. When 30 years ago, when I did my first one, the broker told me, you're not going to make it in this business if you try to make a living doing these loans. Well, unfortunately, he was incorrect, or fortunately, he was incorrect. And we certainly have. My team and myself have brought to Stockton 30 years of experience, built out programs, and shown them a successful way to get these done. And part of that was adding government programs to it, VA, USDA. USDA, obviously no money down. So imagine a first-time home buyer going USDA.
Mhm.
Any of you familiar with USDA on this phone, on the call today, right? So typically younger buyers, no money, and now they're looking at a house maybe that's 30 years old, 20 years old, whatever, and it's got a 20-year-old furnace in it. Are you comfortable selling a newly married couple? Maybe there's a little one on the way, a 30-year-old home with a 25-year-old HVAC system in it, or 20, whatever. You know that HVAC is going to give up on them, and they're going to have to put that. They're going to have to put that on their credit card. They're going to have to come up with some other way to fix that HVAC system in order to to protect their family and live comfortably. When you're offering a USDA loan, if the HVAC system's bad, as a real estate agent, you could give them sound advice and set them off to the path of home ownership correctly by saying, hey, you know what? This HVAC system's old. Let's go ahead and get an estimate for a new one and roll it into the financing. Now you're creating opportunity for people to buy a home and set them off on the right path, right? So renovation is also good for investment in second homes. That's right. So the triplex that Jeff was talking about in the scenario where he helped that gentleman, you could actually buy an investment property, a triplex, or up to a quad, right? And use renovation financing. Now, obviously, there's some particulars to that, and we can obviously take those off to the side. Second homes certainly eligible as well. Myself, I did a lot of second homes in the Snowshoe, West Virginia market. Over the years, a lot of those homes sit up there, and they're obviously grand and very valuable, but sometimes they freeze. The ice builds up, and then over the summer, water leaks in, and the house molds, and then they go back in the winter, and they didn't know it molded until they get back there. We did a lot of renovation loans, cleaning those up, second homes for folks all over the place. Done second homes up and down the coast, you name it. But the key to all these programs, whether it's the government loans or whether it's conventional investment or second homes, primary obviously as well, all the work is always done after closing, right? And you get paid at closing just like any other deal. Okay, any questions so far?
No, that's really good, man.
All right, okay. So you can stop me.
I'm sorry. This is
Yeah.
Tina. I do
Yeah,
have a
Tina.
question. When this is all completed, I'm trying to take notes, but I write fast and then I'm like, what did I say? Is there any chance we would get like a copy of your slides with all this information?
So
I think
yeah.
before you say anything, David, well, two things, Tina. So number one, you'll be able to watch this replay on our YouTube channel.
Oh, okay.
So you could watch on there, you can pause it, you can replay it, that kind of thing. And then I think, Chick is on here. I think he does like a AI record of it, which will summarize it for you. So you may be able to, and Chick, can you share those notes with Tina? So she could stop writing down and like listen to what
Yes.
David's saying and then pick up.
Yeah, I have a Fathom thing. I can send it to whoever wants. You guys can, I'm Jimmy at bridgeinsgroup.com if you want me to email it to you.
Yeah. So Tina, so you can focus on what David's saying. You can watch the replay on YouTube, and then I'll get you Chick's notes.
Okay. Yeah, I'm old.
Yeah, Tina, I'm old too. That like I'm learning. Like I'm sitting.
Well,
listen, this is how I
I'm a
sit
paper
here.
girl.
Me and you both. I got a whole
I gotta touch
ring
it.
binder. Yeah,
I gotta touch it.
but Chick brought me up to speed with this AI stuff, and it comes out real. It takes notes better than I can. So I just read his notes once we're done.
Okay.
Yeah.
All right.
That's awesome.
Thanks.
And I apologize because I do talk fast, so that's why I stop and ask. So I have a tendency to get off track. That's why I love these kind of slides. So it keeps me.
But this is so good. Like everything you're saying, like every word you're saying is holding so much value. Like there's no dead air. There's no dead space. And Tina spoke up, and I'm glad she did, because like I'm grasping on everything you say, because everything you say counts. And Tina, I'm glad you said that, because you can watch the replay slowly, and you can get the notes to dig in a little bit deeper too. So I'm thankful that you said that.
I have a question. This is Beverly.
Yep. Hi, Miss Beverly.
How are you?
Good.
Okay. I've been listening to, and then I did take pictures on my phone of the slides. Since everything is done after closing, do you put together a list of things to be done? How does that work?
Oh, yeah.
Yeah. All right, Beverly, welcome. That's a good question.
Yeah.
It's a great question, and we're going to get there. Okay, you give me just a second. We got a couple more slides to peel through, and then we'll certainly get there. I promise you. All right. Anything else? Okay. So benefits to the home buyer. Very simple. Buy distressed properties. How do they typically do that? Well, if you have any of you ever listed a home as a handyman special, needs fixer upper, needs TLC, carpenter's dream. Have any of you ever listed a property like that? Or cash only?
Nope.
I know somebody's listed something cash only. I know you have, because sometimes as real estate agents, the bank is not going to close on that property. It needs something. Maybe it's a foreclosure that's full of mold. Maybe it's got lead-based
I
paint.
have, sorry.
Aha, see, there we go. All right, thank you for being honest and playing along, right? So foreclosures, any foreclosure or HUD specialists on here? Okay, or REO specialists, I mean, anyone list REOs?
I do know one. Yeah, I do know
Anyway.
one, but she's not on here.
All right, good. So foreclosures, short sales, properties that, have been sitting vacant. Sometimes maybe you've got a beautiful neighborhood and there's that one that's sitting right in the middle of town that's full of mold. It's been closed up for years because it was in an estate and everybody died, but everybody wants to buy the house, but nobody can buy it. Well, by the way, you can buy it and clean up mold, take care of health issues, lead-based paint abatement, mold remediation, falling in basements or whatever, or utilities off, right? Utilities off, not a problem. There you go. Utilities off, not a problem. Sometimes you'll get stopped dead in your tracks because utilities off. Nobody can close because utilities off. We got to turn them on. Not a problem when you use renovation loans, renovation financing. Make any house a home by customizing it to fit the family's needs, right? So a family buying a home, maybe the limited inventory, maybe the homes that are available aren't big enough for their family, or maybe they have to incorporate a family member in with them, and that's why they're looking for a bigger home. With renovation financing, you can add square footage, add a second story, add an ADU, right? A mother-in-law suite, as some would call it. So customizing a home to fit the family's needs, or maybe it's ADA compliant. Maybe they have a handicapped child, or they're handicapped, or whatever. I would tell you, we've closed one of these in the past, where the gentleman was in a wheelchair, and the house that he wanted to buy for a particular reason, obviously location, right? As real estate agents, you all know that. It was the perfect locations where he needed to be, but the doorways were not wide enough for him to get his wheelchair through, and he needed a ramp. So we went in, widened the doorways, built a porch with a deck, with a ramp on it, so he could get into the house and navigate, and then customize the kitchen and the bathroom to fit his needs, right? So ADA compliance, another great tool for homeowners. The big benefit is spreading the cost of renovation over the term of the financing, right? So we're talking about rolling in the costs and obviously doing the appraisal on the subject to value, but spreading the cost over the term. Typically, right now, obviously interest rates are up a little bit. You're going to be looking at $6 to $7 per thousand, I think, in this marketplace on the money that you're financing. So $6 to $7 per thousand, you just call it $70 for every $10,000 that they finance on a 30-year term, right? So $70 increase in payment roughly for every $10,000 that they finance, okay? So you can make it affordable instead of buying a home. A lot of people say, well, we're gonna do the fixer up after we buy the home. That's not always a great thing, right? We're gonna make the improvements after we buy, because what happens? Well, now you're living in it, right? So go ahead and get your estimates. We'll finance it into the loan, spread it over the term of the loan, and you can move in, get your renovations done, and live happily ever after. Trust me, my wife will tell you that is the way to go. That's another story for another day. But if the home that the customer wants to buy is not habitable, they can't live in it because maybe it's, they're not going to have a kitchen, or they're not going to have bathrooms or whatever, they can finance up to 6 months of mortgage payments into the financing as well. So they can maintain their current lifestyle in the home that they're living in or renting or wherever, while the home that they want to buy is being completed and made habitable, so they can move in and live a great life. So up to 6 months of mortgage payments. Renovations are being done. They're managing their life as they always have while their home is waiting to be sold or whatever. So keep that in mind. That's a great other tool. The most importantly, I think also is building equity through renovations, right? So as somebody buys something and they add renovations, remember, we're appraising this property as if it's subject to. We're going to know what that finished value looks like before they ever close, before they ever move through the transaction. So they're going to know. And it's a stopgap for us as lenders to make sure that we're not putting somebody in a bad position by over improving a property, right? But most importantly, the homeowner is going to know that if they bought it for 50,000, we'll use round numbers. They buy it for 50,000, they put 50,000 in it, and it appraises for 110, 115, or 120,000. They know they're off on the right foot, and they've created equity wealth for themselves before they've ever even saved a dime, right? They bought a house, they renovated it, and they've created a little bit of equity wealth for themselves. And if you go back to what I was talking about, the Fixer Upper show, that's exactly what Chip will always run through the math and show them. Sometimes it's not that great. Sometimes it's a few $1,000s, but either way, we know that we're doing right by the customer, and the customer understands based upon the comps in the marketplace and by your guidance that they're making the right decision, right? Okay. Any questions? Still moving?
Still good.
All right. So just a quick before and after, right? Just to kind of, let's put it in perspective here. There's the old, it's not always that it's in dire need of repairs. Sometimes it just needs spruced up and made to be modern again, right? So let's jump into a couple of the programs that are available. And like I said, I'm not here to make you mortgage bankers today, but certainly just give you an understanding of what these look like. So the conventional space has two offerings. So Fannie and Freddie, if you're not familiar, are the two GSEs who provide the majority of the money to us to lend back to the consumer. Fannie Mae has a program called Homestyle, and Freddie Mac has a program called Choice. And we'll just run through what those essentially do for the consumer. They allow for repairs, either structural and or cosmetic. So structural, the house could be half burnt to the ground, right? And somebody wants to buy it and renovate it and make it their own. Or maybe the basement wall's caved in, or the roof is caved in, or the main beam under, has been eaten by termites and that's fallen. So those are structural repairs. You can use these tools or these loans, these programs, to complete structural repairs. Obviously cosmetic, fresh paint, fresh flooring, fresh appliances, right? And appliances have to be permanently affixed to the property. So obviously anything that's plumbed in, even a refrigerator, if it has an ice maker, guess what? It's a permanent fixture now, right? Because it's plumbed into the plumbing. So you can even finance a refrigerator and add to it. Good for purchase. What's that?
I have a question.
Yes, ma'am.
Could all their fixer-uppers be just cosmetic, or does it have to be some structure, some cosmetic, like 2 or 3 usually?
It can be either or. It can be a combination. It can be either or. Like I said, it could be just appliances. It could be just fresh paint. Jeff mentioned something in the very beginning. Even a new house or a newer home may need something to fit the family's needs, right? It may just need freshened up. Maybe they want to just change the color on the house. It's like my wife. She thinks every home in America needs to have a black shingle roof on it. Anytime she looks at a house, she said, that house is great, but it needs black shingles on it. So, there is another example, right? It could be just cosmetic. It doesn't always have to be structural. It could be either or both. Right?
Okay. Is there a minimum cost to finance?
No. And some programs there are, but no. Like I said, the smallest one I ever did was a $500 range. And that was, I mentioned I sent the customer to Lowe's. So obviously you have to have a contractor to do the work. I don't want to get too far off path, but we can also use big box store like Lowe's, Home Depot, Menards. Why is that? Well, it's because they do their own installation and we will pay them at the closing table, just like we would a contractor. What makes it really easy when it comes to that, if you're thinking about some of the inventory that you have or that that's out there, let's just use a quick example of a property that maybe needs a new kitchen, right? And maybe they're like Jeff and they can't create a vision of what they want this kitchen to look like, but they can walk into a Lowe's or Home Depot and see that kitchen, right? You've been there, you've seen those kitchens. They've got the appliances in them. They've got the flooring, they've got cabinets and countertops, They're beautiful. They're ready to go. And a customer can walk in and say, I want this kitchen. Have you ever said that? Anyone?
Yeah.
Oh, yeah.
Yes.
Okay. All you have to do, or all your customer would have to do in that case, is they know they want to buy a house. They can go in and talk to that salesman at Lowe's or Home Depot and say, hey, I want this kitchen. Can you put everything that's in here on a sheet of paper and tell me how much it would cost? They do that. They come back and they give it to Jeff. Jeff then takes their application, completes it, does some math, makes sure that they're able to do that, and then submits that piece of paper to the appraiser and says, hey, appraiser, appraise this house as if that kitchen is in that property. And they do the appraisal. Now it's appraised with a brand new kitchen in it. Everything works, the numbers work. We close the loan, you get paid, and then we disperse the funds to Lowe's. Lowe's puts them on a schedule. They come out and install that very kitchen right into their house. So that is a tool that, as now we're kind of getting into the listing strategy part of what renovation could be for you, especially for those who can't create a vision. You can utilize some of those tools and some of those people who are renovation specialists or home remodelers or home remodeling stores to help you market and sell properties that may have a problem. I'm totally off base right now, so let's get back to this. Primary, so if the Fannie Freddie are your conventional conforming loans, right? They're going to be typically 3 to 5% down, minimum down payment. Good for primary second home investment. This math sounds a little tricky. The maximum that they can finance in repairs is 75% of the as completed value. So it's real simple, right? Let's just use simple math. Don't get too caught up in this math because it's usually never a problem. But if it's 100, if they're buying something for 25,000 and the improvements that they want to make are less than 75,000 and the property appraised for $100,000, well, you've got a $100,000 package. The repairs are 75,000 or less. And they bought for 25, that fits within that bucket, right? So 75% of the after completed value is the maximum amount of repairs for the conventional product. Hopefully that makes sense. Just let it sink in, the math will come to you. The repairs have to be made up to 9 months to complete the repairs after closing. We've got some leeway on that depending upon the scope of work, depending upon the project. They can have up to 3 contractors. After that, we prefer a general. But I think the most important part of the 2 conventional loans is that luxury items are allowed. So what are luxury items? Well, let's think about this. Swimming pools, tennis courts, landscaping, outdoor living spaces, kitchens, outdoor barbecue areas, driveways, detached, attached garage, extra buildings. You can do a lot with conventional financing. So don't ever think that something's not available or able to be done until you've spoken to Jeff and his team. Make sure you understand what the consumer wants, and let's get together and see what we can come up with. Okay. Any questions on the conventional? And these are brief, obviously, descriptions. I can talk about this for hours. I teach a 3.5-hour renovation course for real estate agents. CE course for real estate agents. So there's a lot of material here. I'm trying to condense it down.
We may have to get you up here to WJR to teach a CE course. Sharon, what do you think about
Right.
that? Beverly?
I agree.
Yeah.
I agree also.
Yeah.
Was that Washington Green?
Yeah.
Washington
Yes.
Green. Yeah.
I like that
Yeah.
idea. I agree with that.
Okay.
Yeah.
Well, we'll work on that. So let's move on for now. Again, a little before and after. We talked about creating that vision. This is obviously AI, right? So you can help somebody create what they're looking for by using tools and technology that are out there today. All right, so let's talk about government renovation. There's 3 products to talk about, actually 4 or 6, depending upon how you do math, right? FHA 203K. There's 2 different programs. There's the standard and the limited. There's the VA renovation program and the USDA standard and limited. So sorry to make it so confusing, but I just want to make sure we're covering everything here. The FHA, and I think we talked about this a little bit. This is the one that's got a bad rap over the years, the FHA 203K. It's really a great loan. As long as you're dealing with people who understand it and know how to complete it for your customer, it's not difficult at all. But it is different. The FHA allows for structural or cosmetic repairs in nature. New addition, new garage is allowed. Again, appliances can be financed, good for purchase or refinance, but primary residence only, right? So we're going to follow the rules of an FHA 203B, which is the standard vanilla loan that you're used to, right? Which only allows for primary residence. So in other words, you can't do investment properties or second homes where you can with the conventional, right? No repair limits, but the maximum loan must meet FHA guidelines. What is your max FHA, Jeff? It's 540 now, right? 540, it's 500 some $1,000. So we're talking about FHA, you're 3.5% down payment. Somebody could buy $100,000 piece of property and put $300,000 in it. So $400,000 package with 3.5% down. That's a pretty good deal.
$524,225. Yep.
$524,000.
Yeah.
3.5% down. Don't forget, is your down payment requirement. You give us 3.5%, and we're going to give you enough money to buy the house, $100,000 home, and $300,000. Sounds like a fair trade to me. Up to 6 months to complete the repairs after closing. Now, obviously, if we're doing $400,000 worth of work, maybe we need more than 6 months. That's fine. You know, like I said, there are exceptions to be made depending upon the scope of work. If it's totally, you know, needs more time, especially due to weather, this kind of weather. I mean, it's 9 degrees here this morning, or 3 when I woke up. Can't pour concrete in this kind of weather, right? Can't paint. There's a lot of things you can't do. But there is a HUD consultant that's required. So there's a HUD consultant, which I want you to think of a HUD consultant as a home inspector with extra credentials. That HUD consultant is required for the FHA 203K, and they are there just to make sure the project stays on track. Okay. And manufactured homes are allowed. Manufactured homes are allowed to the point that we will even raise them up and put a permanent foundation underneath them if they don't have one already. So if you've got any of those properties out there, that's also something that can be done. One thing about FHA though, they will not allow luxury items. So no pools, no tennis courts, none of the fun things I talked about earlier, right? All good? Any questions? Okay.
Feel good.
The limited is very much like the standard, except it has a max repair limit of $75,000, which just increased. They just doubled it. It was about half of that recently. And no structural repairs allowed. So the limited is really for cosmetic work. The trade-off is the HUD consultant is not required. You know, so I mentioned the HUD consultant is someone that's like a home inspector with extra credentials. Have you ever had a property midstream get derailed due to a home inspection or a failed appraisal?
Yes.
Yes, we all have, right? Doesn't matter. We all have. Somebody's picked something apart. These programs are also great to keep deals on track. One thing I will tell you about Jeff and his team, if you start a transaction with them and they can credit approve them, they can also get them property approved where most lenders can't. Have you ever had to have your customer change lenders midstream because the bank refused to close on a property after the appraisal or the home inspection came back? Sure you have. Well, in Jeff's case, with him and his team, all they have to do is switch out and put them in a different program and a different product, because we can get that property closed, that transaction closed. People choose a house because it's where they want to live. Again, location, location, location. So if they've taken the time and you've spent all the time to find them the perfect house, let's get them into the perfect house. Let's get them in there. They chose that property because it's the school district they want to be in. It's, you know, it's the neighborhood they want to be in with all their friends or whatever the case may be. Let's make sure that they get the house that they want, and you don't have to start over and find them a new house, which might take another 6 months to 12 months or however long it may take, right? So these products are great to keep deals on track and in motion. With the FHA 203 limited, the manufactured homes are allowed there as well. Any other questions?
Nope.
I just
All
have
right.
a question.
Yes.
I just wanted some clarification.
Okay.
So if you did just have a regular FHA loan, went through the appraisal, found some things in the home that were going to delay closing, and seller refused to address them. The buyer has no money to get them fixed. Then you're saying, hey, Jeff, we can just switch this over to a FHA 203K limited loan. And now we can have those repairs done after closing and you still get the house. Is that what you're saying?
So that's exactly what I'm saying. Now, let me
Okay.
just add a little bit to it. So the appraisal or the home inspection comes back. The seller's not willing to make the repairs. The buyer has no more money except for the 3.5% that they came up with for down payment, which, by the way, can be a gift, right? And the seller could be paying concessions. So they might not have any money. But they need these repairs made before they can close. We would take the comments from the home inspection or the appraiser. We would go have the consumer go find a contractor that can make those repairs. We would get a bid for those repairs. And once we got the bid that the consumer liked, and by the way, the buyer chooses the contractor. We don't provide that for them. They go out and find the contractor that they want to work with, because it's important, right? It's important that they find somebody they're comfortable with. We don't care who it is, as long as we can validate that contractor and make sure that they're upstanding, right? Then we take that bid and we provide it to the appraiser, and then the appraiser gives us the after improved value or the subject to value. And as long as the pieces work, then great, we're good. Yes. So we keep that consumer on track. They buy the house they want, as long as we're able to qualify them, right? Credit wise, with the additional funds. Okay.
And Kendra, this is the point I was making about inviting everybody here. Like when I sat with him, like what you just said,
Yeah.
I didn't even know we could do. Right. Like, and when I sat with him for an hour and a half the other day, my head was exploding going, okay, there's moments here where we can still close on time or maybe delay it a little bit without getting tripped up. And I don't want to jump the boat, but his last slide will talk about seller and buyer financing escrows, where you can do that as well without having to flip the program. So I'm going to just let him stay on course. Yeah.
Perfect. Okay. So just a quick screen on what the differences are between those two programs. We're just going to keep moving. VA renovation. I'm not going to get into everything here because I don't think it's really that important. You can read what's on the screen. What's important to know is that if you're dealing with a veteran, they've earned the right or the ability to purchase a home with no money down by the service they provided our country, right? And we want to honor that. We want to let them use their eligibility. So VA renovation will allow them to purchase a home with no money down. A lot of you are familiar with the VA loan program. The VA renovation program is not offered by most lenders, even the mainstream lenders, by the way, who offer VA renovation. VA loans do not offer VA renovation. So this is very unique to Jeff and his team. It's very unique to Stockton. So this is a program that I want you to keep in mind if somebody tells you they're a veteran and they're looking for a property, remember to broaden your horizon, because you can still find something and they can make it their own by using these types of programs. It could be a manufactured home. It can be, anything that they want, whether it's structural or cosmetic, they can make the home fit their needs. Okay. Okay. Can you hear me?
Yeah. You want to mute just for a second? Yep.
Well, it said that you muted me. It said the host has muted you. I'm like, what? Jeff
Hey,
didn't.
I'm not going to tell you who the host is. And I'm not throwing anybody under the table, but I don't have host rights right now.
All right. Well, I'm sorry, host. I won't, whatever I did, I won't do it again. I promise. All right. Any questions on VA? It's a great program. Get to know it. Reach out to Jeff and his team. They'll make sure. It's not letting me advance. Okay, here we go. USDA, again, the VA loan is for veterans. The USDA loan is very much set up the same as the VA loan. I always called it the VA loan for civilians because it's a no money down loan. It's very similar in structure. And as we spoke in the beginning, you're going to see a lot of your first time home buyers new to the housing market, probably newly married, going out and buying that first home. This is a great program for that. I don't need to talk about what that'll do. All you need to know is everything that you already know about USDA that I'm sure Jeff has explained to you or taught you. Now you can layer in renovation, and you can take any of those homes. And as long as the consumer qualifies for the extra money for repairs or improvements, there you go. You've got a USDA loan on steroids. Go out and make it your own, okay? New roof, new siding, new windows, new HVAC system, new kitchen, new bath, new flooring, or maybe it's just a new stove, right? So there you go. Manufactured homes also allowed on the USDA renovation, and that is a new change. Actually, the USDA just opened up their program for manufactured homes. They've had a pilot program for years. They've actually just modified that now. It's open to the market, and the renovation loan is available on that as well. The limited renovation, again, it's very much like the K and the full K and the limited K. Okay, I don't need to get into all that. See it on your screen. Again, a breakdown of the differences between the two. Now, we're gonna talk about something fun because I know we're burning time here. The USDA or the Jeff mentioned not financing the repairs. So is it Kendra?
Yeah.
Kendra, yes. Kendra had the question about rolling in all the extra repairs on a failed appraisal or home inspection. What if you're in that situation and maybe it's an estate and the seller doesn't want to do anything with it? They're not going to finance anything, but the buyer or provide funds, and the buyer doesn't want to finance it, but the buyer has the funds to make the improvements. Well, the buyer can actually give us the funds, go out, find the house. They don't want to finance the repairs, but they have the funds. Maybe it's a quick fix. Maybe it's a $5,000 repair or something. They don't want to finance it. They don't want to deal with all that. They just want to pay for it. But we don't want them to do that on a home that they don't own, right? So we want to get to the closing table. So we will allow them to give us, we'll have them get the bid. We'll hold the money for the repair. The loan closes, you get paid, they get the house, and then the contractor steps in and does the work. We're not adding any money to the loan. We're just holding money to the side, right? Now, attorneys will do some of that, but they typically have some policies there that mean a lot more extra money has to come to the table. Not in this case. We're going to want the money for the repair plus a small 10% contingency on the project itself, right? If the seller, if you have a listing, and some of you have been in the business for a while, remember the days when you used to be able to advertise something and say, hey, the seller is offering this property with $5,000 concession for carpet or $10,000 for this or whatever, right? For whatever repair needs to be made. And that became something that lenders didn't want to see. They didn't want to see those funds. Well, with this type of program, we're telling you we want to see it, and I want you to advertise that concession, draw the interest to the property, and but make sure that you're having a hard conversation with your buyers about who's able to handle that type of transaction. So again, Jeff and his team can help guide you through that. But what we're going to look for is the seller to provide the funds for that. We're not financing them in. It's going to be provided at closing. So when the loan closes, we'll hold the funds from the seller, and then we'll disperse them on their behalf, right? And what happens is now it's in the advertisement. It's also on the buyer's closing statement. So it's fully disclosed. It's fully vetted. Everybody's very aware of what's happening, and it's the right way to do it. So I'm not saying that any of you would be doing, the money exchange outside of the closing. Which will get you in trouble. I think all of you know that, right? This is a way for you to circumvent that, stay above board, make sure everybody's getting what they need, and get the deal to the table, get paid, get the buyers in the home, get the seller onto the next deal, right? So the buyer, seller, oops, I didn't advance the screen. The buyer seller funded repair escrow, again, we're not financing it, is eligible on all of the loans that we offer. So the conventional loans, the FHA, the VA, and the USDA. It doesn't matter. These are quick fix items, small repairs. We just need to get it done and get on with it. And nobody wants to finance it. Any questions?
I want to stand on that one for a second because that was new to me whenever I heard you say it. And then we hung up and I talked to Corey Beadle. I'm like, wait, we can do this? right? Because
Mhm.
there's often times where we're scrambling to get things done to try to close it on time or delay closing, but we can set up escrow. If the buyer or seller want to finance the repairs, right, and they're just going to hold 10% more than whatever the repair is in that escrow account, and then once the repairs are done, they're going to release the funds. That's a big deal. That's a big deal. Like, I didn't know that. That's a big deal. I mean, that can come into play more often than we thought. Yeah.
Absolutely.
Okay.
Yeah, absolutely. And you know, it works really well. And like I said, I mentioned an estate where the family, you know, that nobody wants to get involved. They're just going to say, okay, we're just going to give the extra money here. We're not going to put the improvements in the house. And by the way, if you're a listing agent, you don't want your sellers to make a bunch of repairs to their property necessarily. That could maybe deter a buyer, right? Maybe the buyer needs to choose what color materials they want or what type of or style of materials they want. If the seller is willing to provide the funds, then look at this as an opportunity or as a listing strategy. Let the buyer choose. Here's the money to do it, right? So
Yeah.
very, very good. And maybe it's a divorce situation and the you know, the house, they're not able to do anything until the house sells. This is another quick fix for that as well. Okay. Any questions? So that's a brief summary on all the things renovation that are out there and available. There's marketing materials available for this to help you sell something or to help promote. You reach out to Jeff and his team and they'll get you everything that they need. We've got co-branded materials on every one of these products that are, some of them are still being created because some of the stuff is very new. But we're here and able to make whatever you need to fit you and your marketplace work for you. So Jeff, anything from you?
No, so I wanted to say, like, commenting on what Sharon said earlier, like doing these renovation loans, when you have an expert, it's easy, right? So like if David was to do your loan on this renovation loan, it would be easy because it's smooth. He knows what he's doing. He's been doing it for 30 years. Our team has not, right? We've done a couple. David has agreed, like unselfishly, to support us and help us through these transactions. I will tell you as your loan officer, we'll scratch and claw with you. You can't call me an idiot as I fumble through this and I go, I don't know the answer, but let me get it for you. But we'll learn. We're fast learners between Corey Beadle, KP, Corey Ward, and myself. We'll learn it quickly. Like, we're fast. But the good news is we have the support of David and his team to help us through these if you want to try it. Now, I don't want to do 50 of these at once. So it's going to be limited for somebody that wants to try this so that we can stumble through it, beat down the weeds, and we can learn this product as well. The other thing I would tell you is this. Going back to what I said in the beginning about telling a story and telling the vision, selling the vision, creating your market, creating your inventory, creating your buyers. If I were you, I would take a screenshot. And David, if you could throw your slide back up of the flipper fixer-upper slide. So get your cameras out, take a picture, take a video of this Zoom call, post it on social media, show people that you are an expert in your craft, that you're banging on your industry, that you're getting better. This is a service you can provide for them, and let people know what you do. Don't be a secret agent. Like, your imperfect action is better than taking no action at all.
Are you talking
And so
about
when
this
I first,
screen?
yeah, that's fine. That one or the other one. Because
Okay.
everybody can relate to it. Like, they see that, and then you post that on social media, people are going to stop scrolling. They're going to go, wait, what's Kendra doing here? What is he do? What's these guys' names? Rich and Joanna?
Chip and Joe.
Chip and Joanna.
So,
Yeah,
hey, yeah. And by the way, I don't know, there's probably a copyright issue with some of this, so be careful. That's
or
my
that.
disclaimer.
Yeah. Don't get a fine. I'm not paying it. Yeah. But yeah, so let people know what you're doing. Don't be a secret agent. Let them know you're trading. Let them know that you can do renovation loans. Let them know that you can help them get into their dream home. And we're here for you. Kendra, do you have a question? I see your hand up.
I do. I
Yep.
just wanted to know real quick, can you have two simultaneous pre-approvals, like one regular pre-approval in case that buyer finds, the regular house and they're okay with it, and then the pre-approval for a renovation loan in case they find something, but it's a fixer-upper?
Yeah. So I can speak to that, Jeff. So what we will typically do, and Jeff obviously may do this differently, but I would tell you in my experience, what we've always done is when we sit down with a consumer and talk about buying a home, we usually kind of walk through the process, obviously make sure that they can qualify. And then we qualify them based upon what their budget demands, right? Where they need to be payment wise. And then also tell them, hey, by the way, you qualify for an extra 30 grand. So while you're out there looking at homes in this price range, if you find something that needs a little bit of extra work, keep in mind that you've got a little bit of a buffer. You can add some repairs or improvements to that. And here's what the difference would be in your payment. Now, we could certainly provide them 2 different pre-approvals, and that's between you and Jeff, how you want to go about that. Or we could just provide them one that's on the higher amount, and then they would know what their budget is and then how much they have available to spend, right? So you could go about that a couple different ways. But to further your question, if you're looking to market something, right, or show them something, we are or have, I think, right now, the ability to show renovation, a flyer, like an open house flyer without renovation financing and with renovation financing, right? So if you're going out to show them something, you can even create something and provide it to you to say, hey, here's what this house looks like. And by the way, as a listing strategy, you could go to the local Lowe's or Home Depots, give them the dimensions of the kitchen or whatever, and say, hey, how much would that cost? And then we could do a side-by-side inside of your open house, even if you want to list it and show, look, here it is with and without. There's so many ways, so many different places you can go with this thing and really expand the opportunity. But yeah, I'm sorry. That's what I was talking
No,
about.
that's so
I'll
good.
keep talking.
Yeah.
Thank you.
Yeah. Any other questions?
I have a question.
Yeah.
So as a new agent, I like 6 months in here. I also own an interior decorating business, and this is something that I have been looking to get into and specialize in. So how do I find out more and start getting the listings of even like vacant homes? Like, again, I'm completely new and I don't know much.
Yeah. So I mean, Jeff is obviously your resource. We're here in the background to help him and supply his team whatever they need. But for what you're looking to do, it kind of puts me in the mind of a Joe Gaines, right?
Mhm.
So you have that innate ability to market properties with and without and create vision and show them. So you and I could spend a lot of time on the phone together, just kind of talking through some ideas. But I would tell you, Jeff's going to be your resource on that. But where the headspace that you're in, that's good.
So
That's
good
stuff.
Yeah.
Jeff, if you have time, I'd love to talk more on this.
You got it.
Thanks.
Jeff mentioned our team. I mentioned to you, Crystal Shahan is on the phone with us. She's been with me for a long time. Her role is to make sure that Jeff and his team stay on track with their disclosures, to make sure the contractor is validated and vetted correctly, to make sure that the bids are matching up with the appraiser and what the appraiser is calling for, or that they've addressed everything. So her function behind the scenes is certainly something that most lenders don't have. And it's going to set us apart and make it a really smooth transaction for your consumer and yourself and for Jeff and his team. Okay. All right. Any other questions?
This was great. David, that was awesome. Thank you so much. I learned so much today.
Me too.
Yeah.
Great information. Thank you.
There's so many transactions that we probably could have saved if we would have known this sooner.
And
Absolutely. Yeah.
I would tell you I'm sorry, but I'm not, because I didn't even know. Right. Until I heard David on one of the Stockton calls, and I'm like, I need to sit with this guy. And then we sat down and I'm like, can you come on? Like, this is going to make agents so much money. Not even like the commissions they're losing, but the commissions they can create and the families you can help. So that's why I asked. And David, thank you so much for being so unselfish and coming on here, man. I appreciate you doing that so much. Here's the thing, the collaboration, right? Like not many loan officers will be like, hey, I'm going to step in your arena and help you and play with an abundance mindset. Oftentimes people are like, mine, and they clutch it and they don't want to help other people. And so you guys know me, like Karen, I think you called me out not long ago. You're like, anytime you learn something, you're trying to share it with the world. And I'm like, yeah, because I want to see everybody win.
Say that about you, Mr. Lagoni.
Yep. Say what?
Yep. You are such a sharer. It's ridiculous. And we appreciate it.
Well, that's what Karen Katrunas was calling me out on a couple weeks ago. She's like, you share everything. You find one thing and you want to share it with everyone. And I appreciate
Yep.
I appreciate David doing that. Yeah.
Well, you're all welcome. Thank you. Thanks for your time. I appreciate the opportunity.
Have a great day, everyone.
Hey,
We're here if you need
you
us.
guys too.
Okay.
Thanks.
Bye-bye.
Thank you.
Bye.
Bye.